Hello guys, and welcome to the White Rabbit Trading Channel. Before we begin, please take a moment to read the disclaimer below. Remember, I'm not a financial advisor and everything here is for educational purposes only. Alright, let's dive in. As a new month begins, let's take a look at December's stats. Last month played out very nicely, almost too nicely, as it hit the levels to the downside almost perfectly, while in November it even overshot the average gain. Of course, the results won't always be this perfect, as these are average moves. However, just like with daily statistics, they can give us a good idea of what to expect and help us find potential confluences for these levels. It also helps to stay calm when the price comes to these areas. On average, December has a move of about 25%, with a median of 22%. This would put Bitcoin above 100K around 117 and 120K if it follows the average move, while there are some levels in between. On the downside, Bitcoin has an average move of around 14%, with a median of 11%, which would put Bitcoin deep into the current range. As for the wick, it averages around 6 to 8%. Time-wise, these moves tend to happen very early in the month during an uptrend, basically in the first week, on the first days, and with an average of 8 to 9 days. Now, let's look at the levels we have and what I'm watching for to get involved in the next move. First, I'm waiting for the weekly candle to close and then drawing some fibs on the weekly wick. More often than not, wicks get filled, not always, of course, especially if the price is either too bullish or too bearish and has already taken liquidity, trapping a lot of traders. In those cases, the market often keeps moving in the opposite direction without giving those traders a chance to exit. For now, I'm not saying this will happen, but if Bitcoin makes a deeper move to the downside, we can see there's a weekly fair value gap right at the statistical average move level, which makes this area very interesting. I'd definitely be looking for setups there. In addition to this confluence, we have more levels around this area. If I put some volume profiles on the chart, you can see it's at a value low of several levels, starting from the 49K low up to the last daily higher low. If I pull an anchored VWAP from the last daily higher low, it also aligns with this area. On the monthly chart, there's the previous month's equilibrium and a monthly EMA, along with other time frames that intersect in this area, which makes this range a strong level of interest. Now that we've defined the levels of interest, let's look at some scenarios, what we'd like to see and what we don't want to see for a continuation above 100K. Locally, we can see that all the average moves, whether based on closing prices or wicks, are still below this local structure, which remains in an uptrend. Ideally, we'd want to see some weakness first, maybe a break in structure to the downside, turning support levels into resistance. For example, we could see an order block turn into a breaker, and from there, we'd look for reactions at the next point of interest. It's never guaranteed that the price will move exactly to the average levels. It could just create new data or even repeat old patterns. There are times when there's no wick at all or just a very shallow one. In this situation, it could mean that the current support level holds or just moves to the next support level, potentially ranging there and making a higher low before the next move. In such cases, managing risk is key, maybe trading lower time frames within the current range. With the right setup, if we get a continuation, we could end up with a good runner. Since we never know how the market will move exactly, we look for signs and base our decisions on whether the risk is worth taking. I'll be watching for setups at all support levels in these areas, and I'll also try to hedge at resistance levels. In the worst case, a move down could be around 14%, based on the average data, and while that's not what I'd personally prefer, it's data, and I need to be ready for different outcomes. But just because that risk exists, it doesn't mean I'll shy away from taking long setups if I see the right signs, even if it ends up being a losing trade. If the price starts making new lows, I'll watch how it reacts around these zones. The next level would then be a confluence zone with the monthly stats and potential SFP or deviation. If it shows strength from here, then I'll simply trade with the trend, like I did previously. The worst case scenario, besides a flush down, would be breaking below this range and starting to close higher timeframe candles beneath it. Even if that doesn't change the daily or weekly uptrend immediately, it would be the first sign of higher timeframe weakness. In that case, this strong support level would turn into resistance, and if it fails to be reclaimed, it opens the door to lower levels. I'm not saying this will happen, but at some point, it will either from higher levels or here. Until that happens, it's wise to stay with the trend and not try to predict the top repeatedly while the price is still moving up. And as always, pay yourself along the way, no matter how or why you're trading against the trend. I'll also be watching Monday's range again to see where we go from there. If we take a quick look at tomorrow's data, we have an average loss of about 2.35% and an average gain of 3.5%. Depending on where the price closes today, the average loss would be slightly below the 4H order block, while the average gain would take us to a new all-time high. For that to happen, the price would need to break above the previous local lower high and hold strong, otherwise, we could see a longer range here. Of course, there's always the possibility of a high-volume breakout day, but for that, we need to look at the signs and market structure. Indicators like CVD or order flow can help gauge the strength of a move. From my side, I'll stick to the market structure until proven otherwise, as this has given me a better win rate personally. Alright, that wraps up the monthly stats update. Let's see what the market brings us in the upcoming days. That's it for today's update. If you found this video helpful, don't forget to like, subscribe, and share. I'll keep you updated as the market develops. Until then, trade safe, and I'll see you in the next one.